Testing 1 2 3 testing. Testing 1 2 3. 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 Assalamualaikum warahmatullahi wabarakatuh. Very good morning to my class members. This is investment and portfolio management. Alright, so we have actually covered a little bit on a different type of investment alternative last week, correct? Alright, now I'll have to check first whether it's okay or not. Okay kita. Alright, so last week we have covered, right, investment alternatives. So basically we have identified that there are several investment alternatives that we can venture into, and the first one is actually the non-marketable investment, such as a savings account, a bond, money market, which we cannot be cannot be sold in the market. And then we have the second one, which is the capital market. No, we have also the bond capital market, which is actually looking at the debt market and also the equity market. So the debt market comprises of the bond or sukuk, and the equity market is actually looking at the stocks, okay, shares, for example. Common stock, common shares. Okay, the stock and shares is actually is being used interchangeable. Okay, basically it's the same thing. So in the under sukuk, okay, or bond, we have to look at the what call it the return that actually the bond issuers provide to or promise to pay. And also when we look at the equity market, there are common stock, there are preference shares, and so on, right? So basically preference shares is actually a combination between bonds and also common stock. All right, okay, so that is last week. All right, and also, okay, before I forget, that last week also we have covered about derivatives, okay, which are is actually a bit complicated, okay, the financial structure of securities, which is looking at a derivation of a security, okay, to form another security, okay. For example, you have options, you have we call it futures, all right, which is actually a derivation, okay, its values depends from another security. All right, okay, that is what we have covered last week. So what I'm going to do this week is actually to continue on to the what you call it lecture that I've mentioned, I've actually given to you in the first week. Alright, so if you can still remember, alright, so when we look at the portfolio investment, so it depends on also what would be the lifestyle, your risk tolerance, whether you are actually risk averse or risk takers, and so on, right? And also portfolio management is actually a process whereby whether you want to be an active or a passive investors, right? So basically active is actually you are really active, you read about the stock market, you read about your investment, you read about your assets and so on, and you spend time when you are active. But if you are passive, basically you just let it be that so that you just sleep on it, alright? So you invest in some asset, and then you try to sleep on it for 1 year, then you look at whether what will be your investment be. All right, so I will change the view, right, to uh, my desktop, right? Okay. All right, so we have covered until um, okay. Now let's look at portfolio management. So I've mentioned before, it involves whether, okay, you want um, uh, to involve actively or passively. Okay, so relationship between various investment alternatives must be considered if an investor is hold to an optimal portfolio. Alright, so basically the first thing is that, okay, you must decide, okay, what will be the time that you want to spend with your investment. Do you want to spend 2 hours a day, or you want to spend 4 hours a day, right? Or you don't want to spend any single hour or any single minute a day for your investment. All right. So basically, but if you want to be like the one who actually sleep on it, okay, you just buy your investment today and then try to sleep on it for 1 year. It's quite difficult to do it in the current what we call it situation, because the market right now is very volatile. So any news or any changes in the market direction can actually affect your investment, can affect your portfolio. So basically, the type that normally people do, which is probably in the 70s or in the 70s and 80s, whereby you just buy investment and then sleep on it for a year or two, right? So it might not be suitable in the current situation, because there are a lot of what we call it things that happening in the world, and with information we can get very easy to be accessed, okay, and it's very fast to get the news, okay, around the globe. So basically, people will react towards the news very fast, and that's why we need to actually to be updated on what's happening around the world, around the globe, and then also we need to monitor our portfolio investment. So basically, you need to be at least, okay, at least we call it not too passive, but maybe I can say that maybe in the middle. Okay, so if you don't want to be an active or hyperactive, you might need to be a bit mild active, something like that, right? Okay, understand? Okay, let's see. Any questions? Any questions? Okay, any question? No questions? Okay, soalan dia, okay, means kalau kita aktif, sekejap saya tengok dalam ni. Okay, there is a question here. Okay, right. Okay, soalan dia, okay, means kalau kita aktif, sekejap saya tengok dalam ni. Okay, kalau kita aktif, kita dalam situation high risk and high return kan. Okay, kalau dalam case when you are active, okay, basically you can be high risk, high return, you can be high risk, low return, you can be in any situation. But an active investor is simply stating that you spend more time every day or in weekly basis on your investment. So you read about investment, you watch the news, okay, television, business news. You read about the global, what's happening in the global. All right. So basically, you spend more time with your we call it investment, and then maybe you have lesser time for your Korean TV or drama. Right. So that's what I'm trying to say. You understand that? Okay. Okay. All right. Okay, let's continue on. Okay, portfolio as a process. Okay, basically portfolio is actually is a process whereby you basically you like to select, okay, the best asset, okay, that would suit in your portfolio, evaluate it, okay, whether it's actually performing or not, right? Basically that's simple. So basically definite structure everyone can follow, integrate a set of activities in a logical and orderly manner, and continuous and systematic, okay. This is very important. It must be continued. You have to do. You have to evaluate. You have to keep on basically assessing your portfolio, and then it also encompasses all portfolio investments. And then with a structured process, anyone can execute decision for an investor. So that's the thing. So basically, when we talk about portfolio management as a process, as a process. Okay. So when we talk about a process, so objective, constraints, and preference are identified. So what will be your objectives, right? For example, why you want to invest at the first place? Okay, if your objective is to ensure that you want to go to perform your pilgrimage within 10 years, for example, okay, or you want to purchase a house, okay, with your investment, or to purchase a luxury Hermes Birkin, right? Or maybe you want to purchase an apartment and so on. And then what will be the constraints? What will be the problems? What will be the hurdles that you will be facing? Okay, and what will be the preference? Okay, in your investment. Now, maybe your preference is only looking at Islamic or Sharia compliant investment vehicles only. Okay, or you want to go for something unique whereby you want to be taking only high risk, high return. For example, you want to go only for derivatives, okay, products, for example, for futures and options and so on, right? So you need to explicit investment policies. So now you have your investment policies already. Okay, if you say that I don't want to invest in penny stocks, penny shares. Okay, what is penny shares? You know what's penny? Penny. Okay, penny shares is actually my simple definition is actually shares which is below than 50 cents. Okay, below than 50 cents. So if below 50 cents, then we can consider that as penny shares, right? And then if it is above 50 cents, then we can consider that it is not considered as penny shares, but maybe like uh, 50 to 1 ringgit is still like more or less like a penny, right? And then 1 ringgit and above is actually not penny. Okay, so this is what we call it a layman term definition of what is penny share. So if you say that you don't want to invest in penny shares, you want to only invest in blue chips companies, then that is your preference. Alright, now strategies developed and implemented. What will the strategies developed and implemented? Okay, alright, so you might want to have strategy buy and hold, or you want to have a strategy which is buy on dip, okay, or you want to have a strategy of ride on the market and so on, okay. And then market condition, okay, asset mix, okay, what would be the percentage of these your investment? For example, you might want to have, let's say we have real asset and also the financial assets, okay. We have the real asset, remember, real asset and financial asset. Okay, what are the real asset? Real asset properties, equipment, machineries, factories, which is physically we can touch, we can see, and then that is real assets. And financial assets are securities such as savings account, ASB, tabung haji, your suku, your shares, your unit trust, and so on, right? So what would be the best, okay, what would be your preference that you want to have your asset mix? Okay, what would be the percentage of the real properties compared to the financial real asset and compared to the financial assets, right? All right, so for me myself, I have a very big lump sum of allocation in the real asset compared to the financial assets. Only a certain portion is in the financial assets. Okay, why? Because maybe I have my age is already not that too young, so basically that's why my investment is more towards the real asset as compared to the financial asset. So I like to have that thing to be seen, to be I like to touch it and so on. So basically that's why about 90% of my investment is on the real assets. Okay, you might want to have your own we call it asset mix. Okay, so any questions? Any questions? Any questions from the floor? Anybody? Alright, so if there's no question, then we will continue on. Okay. Then we have the asset mix, alright, and also the portfolio must be adjusted, okay, accordingly. Okay, which I'm trying to say is that you cannot just buy your shares and then just leave it until 10 years, because you need to monitor your investment. Okay, because there is a lot of uh, issues out there, right? The issues with Donald Trump, policies, the issues of a new government, for example, Malaysia, for example, PRU, the latest one. Okay, the new government has taken over, alright? And what happened is that many companies that which are uh, depending on the government contract, okay, might have some difficulties in continuing the contract, okay, with the new government. That is one simple example, and we can see this is happening in the real world, okay. And if you do not actually adjust your portfolio, then it's going to be something that which is very disastrous, if you can say that. Okay. All right. Now let's look at individual and institutional investors. Now I think I have actually covered this in the previous lecture. All right. So basically, institutional investors, they sometimes we call them as Juho. Okay. So they have their long-term investment policy for institutional. I mean, their policies are a bit stringent, because they are dealing with this money from public money. For example, if you are an institutional investor, I can say like Tabung Haji, or maybe you are from EPF, okay, Employees Provident Fund, and then also and from Kazana, or from KWAP, okay, WAP, and so on. So basically, you are also facing risk, but you need to reduce the risk because you are dealing with the public fund. So you want to ensure that the investment that the public made can, with you, can actually provide return to the investors. Okay, so when we formulate investment policy, okay, look at your objective, return requirement, and risk tolerance. Okay, so investment policies basically summarize the objective, constraint, and preference for the investor, right? So information needed is what will be your return requirement. So probably your return requirement is maybe 10%, 20%, 30%, 40%. It depends on your risk tolerance. If you want to get for 40%, probably you want to go for the derivatives, okay, which is a high risk, right, and speculative. And also, you look at the constraint and preference, liquidity, okay, whether you are liquid or not, okay, the time horizon, how many years that you are looking into, 5 years, 10 years, 1 year, 1 day, alright, laws and regulation, taxes, unique preference and circumstances. Alright, so this is also we have already discussed. Alright, the risk and return position in the various life cycle. So basically A, okay, is for accumulation phase, the early career, high risk, high return. When you are 20s, 30s, probably you are here, right? And then B is consolidation phase, mid to late career. This is about 30 to 40s, right? This is probably 40 to 60s. So spending phase, whereby you spend and give things. So probably this is 50 to 60, or maybe 60 to 70, right? Because that's the life cycle of human, right? Okay. Then you formulate your investment policy. Investment policy should contain a statement about inflation adjusted return. Okay, clearly a problem for investors. Common stock are not always an inflation hedge. Okay, so because sometimes common stock also you have a lesser return. Your expected return might be 10%, but your realized return is lesser than your expected return. And the inflation normally for Malaysia is around about, and we have to check about that figure. The latest figure is probably around, I can't really remember what will be the latest inflation figure for Malaysia. Right, but we will check it later on. And then unique needs and circumstances may restrict certain asset classes. Okay, you may restrict certain asset classes if you only want for real assets only, no financial asset, because you're really traditional. You are very very traditional. You want to invest in only properties only. So then you might want to do that. Okay. Then formulate an investment policy. Okay, the time horizon, objective may require specific planning horizon. Liquidity needs, investor should know. Future cash needs, okay, when do you need the money, right? So whether you need that money frequently, or do you actually can have a less liquid investment, okay. Tax consideration, ordinary income versus capital gain. For example, if you are in the real properties, okay, for your first house, okay, you can actually escape the RPGT. Okay, you don't have to pay the RPGT for your first house that you sell on the income that you gain from the property capital gain. But for your second house and third house, okay, you need to pay your RPGT even if it's less than 5 years. So basically, it will cost about 30%. So that is actually the thing that you need to know, right? The tax consideration, okay, and main aspect, okay. And also the retirement program offer tax sheltering and so on. Okay, legal and regulatory requirement, prudent man rule followed in fiduciary responsibility. Interpretation can change with time and also circumstances. Standard apply to individual investment rather than the portfolio as a whole. So basically, this is the prudent man rule. Then capital market expectation, the macro factors, okay. Expectation about the capital market. Where will be the direction of the global economy, for example, okay? Where will be the direction of the Bursa Malaysia, okay, in this coming few months, okay, after right the election, like the PRU 14. So where will be the direction? I'm very is now is in uncharted area, whereby it's very volatile in a sense, because the policy is not being put in place in proper position yet, okay, but probably after quite some time it might have some stability, and we can see that the direction of the economy or the direction of the Bursa after all the policies has been implemented or has been put in place. Okay, and then we look at also at micro factors, which is estimate that influence the selection of a particular asset for a particular portfolio. Right now, you have a portfolio. What would be the asset that you want to put in the portfolio? All right. So you need to select, evaluate. Then you think that this. I always say to my colleagues in Telegram group. Okay, sorry, I just check first whether we are okay or not. All right, so we are still okay. Are we still okay? Where is the? Okay. Okay, let's bagi saya rehat sekejap ni sebab cakap. Okay, still okay, still following. Alright. Okay. Rate of return assumption make them realistic. Study historical return carefully. Okay. That's why it's very important for us to study the historical data. Okay. And then because we want to make it realistic, so sometimes we have nafsu kan, we want to get, if possible, 100% return, but normally we have to be realistic. What would be the what you call it, the return, okay, that is realistic, that can be achievable, as compared to kita just like dream that we're gonna be a millionaire in 1 year, or maybe in 1 day or 2 days, and so on. Alright, so that's why if you want to invest in the stock market, probably you need to get data which is more than 2 years, okay, more than 3 months, okay, 2 years, more than 3 years. You can study the historical data of the company. And then you construct the portfolio. Okay, use investment policy and capital market expectation to choose the portfolios of assets. Now, define securities eligible for inclusion in a particular portfolio. You need to define securities that you want to put in that portfolio. Alright? Okay, Sharia compliance only, or one, for example, Sharia compliance only, and then maybe financial asset only, or maybe combination of financial asset and also real asset, and so on. And then when you talk about portfolio, it's very difficult for you to combine the real asset with your financial asset. So basically, just try to confine it with your financial assets. Okay. And you use an optimization procedure to select securities and determine the proper portfolio weight. So basically, there is like, you want to have an optimal portfolio, right? Which is can give you maximum return with the lowest risk. Okay, maximum return with the lowest risk. So basically, you need to have a model, right? So basically, one of the model is Markowitz theory. Harry Markowitz, 1956, provide a formal model. So we can follow Markowitz. Okay, we can follow Markowitz. Like this, Markowitz. Alright. Markowitz theory is very simple. Okay, you try to make sure that your securities fall under the security line of an optimal portfolio. All right. So we will go into that further later on. And then asset allocation involves deciding on weights for cash, bond, and stock. Okay, most important decision. Difference in allocation cause differences in portfolio performance. So if you more towards cash, right, this one, then probably your return might be lower. If you are more toward bonds, your return might be higher than cash. But if your investment are more towards stock, then the return won't be higher because stocks are more risky than bonds and also cash, right? Okay, so different allocation where you put your investment, you put in cash, your bond, in stock, also will affect your portfolio performance. Okay, factor to consider is return requirement. What will be your return requirement? If you're talking about 20%, then probably here should be more here. If your return is about 5%, then probably here, bond, more towards bond. If you don't care about your return, you just want to have cash, you are going to be so liquid, so then you just put your money in as cash, okay? And also you depend also on your risk tolerance, time horizon, your age is very also a factor that should be considered when dealing with asset allocation. All right. Okay. Hmm. Still following? Alright, so just to make sure that I'm not talking. Okay, alright, okay, still following. Alright. Okay. Any questions? Any questions? Okay. If there is no question, then we continue on. Very well. Okay. Here. Okay, asset allocation. Asset allocation, we look at two, which is strategic and tactical. Okay, strategic asset allocation, simulation procedures used to determine the range of outcomes associated with each asset mix. Okay, so basically, it's actually looking at a long run, long term. Okay, strategic asset mix. Tactical asset allocation, changes in asset mix driven by changes in expected returns. This is actually looking at the market timing. So basically, strategic is more long term, tactical is more looking at the current situation, what is actually happening in current situation. Okay, asset allocation example, the following mix may be appropriate for young, knowledgeable investors with a long time horizon and high risk tolerance. 5% cash, 15% fixed income, and 80% equities. Okay, this might be maybe around 25 years old to 35 years old, right? Okay, the following might be appropriate for a retired investor with a short to medium time horizon, with low risk tolerance and a need for current income. So probably 20% cash, 60% fixed income, and 20% equities. Okay, because they want to have fixed income. Okay, because they are not working anymore, so that's why they put more in the fixed income financial securities. Okay. Okay, monitoring conditions and circumstances. Okay, so investors' circumstances can change for several reasons. Okay, first maybe wealth changes, investment horizon changes, liquidity requirement changes, tax circumstance changes, legal regulatory consideration changes, unique needs and also circumstances also change. So basically, these are some of the things that condition that we need to monitor, right? So if the wealth changes, okay, from from broke to super rich, for example. Okay, investment horizon changed. Maybe you want to cut it short from 10 years to 5 years, right? Or maybe you need to use liquid money instead of with cash instead of putting it in the investment and so on. So this is the thing that might be changing for when you are investing. So that's why you need to do some portfolio adjustment. Okay. So basically, portfolio not intended to stay fixed. Okay. Basically, don't do this. There are some people who actually do this. They say that, okay, this is my investment. I want to buy it. I want just to sleep it and wait it, and then probably throw away the password. Okay, for example, you buy stocks and then you throw away the password of your platform, and then you wait until 10 years. Okay, so yeah, probably they say that, okay, we have done a lot of we call it analysis, very rigor, okay, very thorough analysis about the company and so on, right? But that analysis is only good for that particular time. You do not know what is happening in the future. You don't know what happening in 1 year time. Okay, you don't know what would be the global direction, what would be the market direction, would be there is a change in the demand for the company's product or not. So basically, you need to adjust accordingly. All right, and key is to know when to rebalance. Okay, rebalancing costs involved with brokerage commissions, because you are not a trader, right? You are investor. Trader, they trade every day. They trade intraday, they trade. I am a trader, right? I trade intraday, I trade 2-3 days, right? So basically, when you trade, you have to pay your brokerage commission to your broker. But as investor, they tend to be less trading, right? They do not trade, okay, because they will actually keep their investment, and they want to get is either dividend gain and also capital appreciation, right? As compared to traders they want to get fast return. Okay, they want it to get probably if you are intraday traders, then you need to do every day you need to trade, right? And then every day also you need to pay your brokerage fees. Another possible impact of trade on market price and the time involved in deciding to trade. Okay, basically cost of not rebalancing involve holding unfavorable position. Now, you might have some stock, for example, if you have stocks, okay, that you actually the performance is not good, but you're still holding it because you do not cut loss. You do not what do you call it cut loss. I mean, you do not throw that stock from your portfolio, to throw the stock away from your portfolio. That's the problem when you have some emotionally attached to the stocks. Okay. All right. So just checking for. Okay. Just checking my the stock market. Okay. All right. Okay. All right. Okay. Can we have a 10-minute break? All right. So we will continue on after 10 minutes. Okey. Salah satu juga boleh mempengaruhi um, hmm, makro tu. Yang makro tu boleh mempengaruhi makro currencies ni kesan makros. Okay, saya saja ya. Sambil-sambil nak tengok hari ni punya market. Tinggi naik 8 sen setengah. Crash. Okay, Ukres dan juga Kuskapi pun ini pun naik. Okay, NYEG, Sakura dan Kuskapi. Pagi tadi saya beli KSIC ni. Saya beli KSIC ni, kenapa saya beli KSIC? Sebab saya tengok Ukres tengah naik. Ukres naik, okay, KSIC mesti naik. Dia adik-beradik. Yang ni adik, yang ni abang. So Ukres dah naik 9 sen. Adik dia belum naik lagi ni. So kejap lagi adik dia akan naik. Okay, adik dia baru naik 2 sen setengah. Selalunya kalau ikutkan saya punya analisis yang dahulu, dia dalam kenaikan dia lebih kurang 40 sen lah. So kalau Ukres naik 1, dia akan naik 0.4. So kalau ini 0.9, dia akan naik sebanyak berapa? Kalau 1, so dia akan paling-paling pun lebih kurang 3 sen setengah lah akan naik kat sini. Untuk KSIC ni okey, akan naik 3 sen setengah ataupun 4 sen kalau UPRES naik sampai 10 sen. 35% sehari ya, kalau tengok. Okey. 35% sehari. Seronok ya, tengok dia punya volume yang masuk. Okey. Tapi saham ni high risk high return lah. So tadi saya beli KSIC, harga ni tinggi sikit, saya beli pada harga 18 sen dan saya average down pada 17 lebih lah. So sekarang ni harga 18 dan mungkin kalau kita target dia sampai naik ke 3 sen setengah atau 4 sen setengah, so dia akan jadi 20 lah, 20 sen. So kita kena tengok. Okay, saya sebenarnya pun tadi saya tak tengok pun pada chart KSIC sebab saya hanya tengokkan kepada kenaikan UPRES. Dah jatuh okay, tadi 17.5 naik balik 18. Okay. Kita break sekejap sebab cakap saja ni kadang-kadang perit juga tekak. Pertama bulan puasa lah. Saya ada RHB untuk stock market dan juga saya ada Hong Leong untuk stock market. Okay. So KSIC dah jadi 18.5, 19. Okey, 19. Nampak tu. 19.5. Okey, 19. Alhamdulillah. Okey, 19. Kenapa dia naik? Sebab UPRES naik. Okey. Nampak? Ni adik-beradik ni 19 lah sekarang ni. 19. So saya ada KSIC ni macam mana tengok ni. Saya tak biasa sangat pakai ni. Okey. Account portfolio. Okey, shares at hand, search. Kan. Okey, ini baru beli tadi sudah ada 2,100. Pagi tadi dah saya beli 2,125 2 sen. So pada harga 19 sen. Okey. So kalau kita tengok dia naik pada 19.5 maka ni. Tapi kalau kita saya rasa dia akan naik sebab tengok UPRES ni. Okey, naik ya, senang. So ini akan naik juga. Sekarang 10 sen. Okey, ini pun sekejap lagi akan habis lah. Akan habis 1.7 juta ni. Okay, ini dah habis 1.5. Tak lama lagi akan habis sebab ini kalau kita tengok carta dia. Okay, KSIC ni dia downtrend hari tu. Dia pernah paling tinggi ialah 34 sen. Dia jatuh je. So sekarang ni kalau dia dah sampai tadi berapa sen tadi? 19 sen sini so dia dah berada di atas awan. So dia dah pecah dia punya ni. So dia akan uptrend dan dia dah lebih tinggi daripada yang ni. Okay, so probably dia okey lah. Cuba kita tengok Ucrest pula. Okay, Ucrest. Okay, ini KSIC Ucrest. Masih lagi updating. Okay, Ucrest kita tengok sini. Sekarang ni dia ni dah berapa hari bulan? 1/6. Okay. So Ucrest ni dia dah sampai ke berapa sekarang ni? 30 mesin. 30 mesin tu dah atas daripada awan ni. Ni awan kumuh ni. So basically dia dah ni lah, okey lah kan. So sebab tu dia punya volume tu masuk okay. So ini ialah okay. Alright. So risiko tinggi untuk saham dan bergantung kepada risk tolerance lah, risk tolerance. Okay. Okay. So Ucrest ni contohnya MIG ni daripada RM2.70 sekarang ni 71 sen. Jadi ini saham berkaitan dengan kerajaan yang baru. Ini pun sama, Eden. Ini tiba-tiba masuk dan ini ialah kataan Metal Coke okay, ini juga saham yang berkaitan dengan Pakatan Harapan dan juga Opcom. Okay. Ini kaunter minyak. Okay, Hibiscus. Yang WC ni adalah untuk kaunter warrant. Okay, warrant anak yang misalnya macam last week kan saya dah explain tentang warrant Okay. Okay, GSB ni diorang satu kaunter penny bawah daripada 50 sen kan. Dan ada orang tengok nak suruh monitor tapi saya tengok dah jatuh. So Ucrest ni kayak penny, Kuskapi ni pun penny. Ini semuanya orang suka main lah. Okay, sebab dia murah. Okay, and then KSC pun kira penny. Right, so itu. Okay. So saya target kalau dia naik nanti sebab tengokkan pada 35 sen, so dia dah berada di atas kepada support dia. Okay. Kalau kita tarik Fibo, ini saya tak apa kita sambil berehat. Okay. Kita just buat sedikit analisis. Ini sebagai trader bukan sebagai investor. Tengah mungkin terlampau ni updating ni. Okay lah. Alright. Boleh start ke sekarang? Okay, kita start Baizura. Okay, kita dalam kelas ni kita ada Baizura, okay, Afiqah, Hamizah, Muhammad Suhaimi dan Nurul Hanis. Okay. So sebenarnya kita ada 5 orang je dalam kelas ni. 5 students taking masters in Islamic finance. Alright, PowerPoints, right? Okay, portfolio adjustment. So basically, so portfolio is not intended to stay fixed lah. So you adjust lah, rebalance. So if there is changes, you need to rebalance. Okay, there is something happening. For example, the last time, if you remember, Donald Trump has some issues with China. Okay, they're having like the trade war between US and China, and they want to impose the steel tariff. Okay, steel tariff to the all imported steels, okay, from China and the rest of the world, so that they want to protect the steel manufacturers, steel companies in the US, in the United States of America. And what happens that Malaysian companies which actually producing steel affected badly, okay, when the news about the tariff okay being imposed, okay, towards all other steels imports towards the United States. So I was holding Mars Steel, Malaysian Steel, okay, and at that particular time I have actually I have to rebalance my portfolio because I need to reduce, okay, my holding in Mars Steel, and then I have to let it go, okay, even though I'm not making a lot of profit. Okay, I've made some profit, but not as my expectation. So I expected more profit from the investment, from my purchase of Mars Malaysian Steel. But because there are some circumstances, because the problem with this global effect of steel tariff, so basically I have to do whatever with what we get at that particular time. Come, stand here, come. Alright, so basically what we call it is it actually I managed to reduce the loss. If I keep on holding the Malaysian steel, Mars Steel, I have been losing a very large amount of money. So that's the thing. But sometimes it's very difficult because you need to have a very discipline, okay, in this investment. Then you have to measure performance. Okay, basically allow measurement of the success of portfolio management. Keep up on monitoring strategy and evaluating risk. Important for those who employ a manager and those who invest personal funds, and then determine reason for success or failure. So you need to do the muhasabah. You need to do ask what would be the reasons that your investment is not performing well, or maybe what's the reason that your investment is performing, right? There must be some reason. There must be a good reason. It should not be like something that happens magic, right? But sometimes magic do happens, right? I'm not saying that magic do happen, but sometimes the market is unpredictable. Alright, so you determine what were the reasons of the success, the failures, okay, how you want to overcome your problem. Maybe it comes from you yourself, okay, because whenever you are the investors, when you are the one who actually make the purchase and also the sell of your investment, basically you deal with your own emotion. So you are actually dealing with yourself, right? You're dealing with yourself. So that's the biggest part. Okay, the biggest part is dealing with your emotion. Okay, calculating. Okay, we call it looking at the chart, and also it's very simple. It's actually need your we call it neuro. We call it is the left side of the brain, but your emotion. Okay, when you, for example, when greed comes into picture, when fear comes into picture, right? You see that the price of the shares keep on escalating, and then you tend to actually, okay, just wait for it, okay, until maybe you can have more money, okay. Okay, example is the key exit is now, okay. It's only now it's already 18 cents, so it's actually down by 1 cent. All right, and also when we deal with fear, okay, the price of the shares goes down. Okay, you are fear that you're losing money, and you keep on saying to yourself that you say that, okay, never mind. Maybe you can actually the price will rebound back to your expected level, and it does not, okay, we call it rebound to your expected price, but it keeps on going down and going down, and end of day, and at the end of the day, or the end of the we call it story, you make more losses as compared to we call it profit. Okay, the asset allocation decision. Okay, asset allocation just now. Okay, example that I've given just now. If you are still young, you might want to have more towards stocks, lesser in cash. If you are already call it at the end of your life cycle, probably you want to have more cash, more fixed income, and lesser stock market. Okay, all right. So individual investor life cycle is very important. Portfolio management process, the need for policy statement, constructing the policy statement, and also the importance of asset allocation. Okay, so this is asset allocation. Okay, so okay, this is the thing. So you have the accumulation phase, long-term retirement, children, universities needs, and children universities need, and then short-term house, car, consolidation phase, long-term retirement, short-term vacation, children, universities need, and spending phase, gifting phase, long-term estate planning, short-term lifestyle needs, and also give. All right. So this is our phases of investor life cycle. We have three: accumulation, consolidation, and this is spending. Basically, in the stock market, also the same. You have accumulation phase, you have consolidation, and then you have distribution. Okay, but in the stock market, you have four. Right? Right. Okay, you have four stages, but almost the same as the investor life cycle. Okay. All right. So life cycle investment goal: near term high priority goals, long term high priority goals, and then lower priority goals. Okay, you need to set, okay, the near term. So this is your high priority goal, this is long term and high priority goal, and so on. Okay, benefit of investing early and often. Okay, now this is using compounding. Okay, you need to know about future value and present value. All right, factor. Okay, future value and present value. Okay, So example here, okay, this is the future value of initial 10,000 investment. So if you have 10,000, this is in dollar, right? And then you invest in 20 years at interest rate of 4%, you will get 21,911 and 23, okay, in 20 years at 4%, and your present value is 10,000. This is your future value, okay. And then if you invest in, you keep it until 30 years, right, you will get 32,433. 40 years, 48,010 ringgit and 21 cents. So this is 4%, 40 years, you get future value of 48,010 ringgit and 21 cents from your initial investment or present value of 10,000 ringgit, right? So your 10,000 become 48,000 ringgit, but it take 40 years to reach this, okay. But if you have interest rate of 6%, all right, within 40 years, okay, you will get 102,000 ringgit. See, okay, if you compare 4 and 6 and also the number of years, you can see that the future value is greater if you have a higher interest rate. Now this is if you invest in a lump sum today and wait for 20, 30 or 40 years. But if you invest in consistently, for example 2,000 annually, okay, the effect is much more greater. Okay, you invest 2,000 every year until 20 years, okay, for example, you will get 59,556. Okay, 2,000 every year for 20 years, you will get 59,000. Okay, and 2,000 every year, right? And you do it consistently for 40 years, you will get 190,051, right? So 2,000 a year, you can get 190,051. And if the interest rate is 6%, okay, the amount has doubled up to 309,522.93 for 40 years if you keep 2,000 annually, right? Okay, so this is what we call it the future value of the initial investment plus the annual investment. Okay, so this is your initial investment plus annual investment. Okay, you first put 10,000, then every year you put 2,000. Okay, you can see that you get 238,000, okay, for 40 years at 4%, and 412,000, okay, for 40 years at 6%. So you can become an automatic millionaire if you want, okay, but you need to adjust how much is the rate and what will be the amount that you need to keep annually or monthly for you to become a millionaire. So this is what I call it future value and present value compounding factor. This is a must knowledge for you to understand the concept of money. Alright, the concept of money. Okay. Okay, portfolio management process policy statement. Okay, specify investments goals and acceptable risk levels. Okay, should be reviewed periodically and guides all investment decisions. Okay, this is portfolio management process. We have policy statement, focus on investor short term and also long term. Uh, Familiarity with capital market history and also expectation, right? And number two, examine current and projected financial, economic, political and social condition, focus short term and intermediate term expected condition to use in constructing a specific portfolio. And number three, to implement the plan by constructing the portfolio, focus is to meet the investor's need at a minimum risk level. And also number four, feedback loop, monitor and update investors' needs, environmental condition, evaluate portfolio performance. Okay. All right. Okay. It's already 12 o'clock, so I think we will actually end the session now, so that you can actually um, read, okay, and also try to um, understand the concept that we have discussed today, mostly on the portfolio, the theoretical aspect of the portfolio, the need for you to see, to evaluate, to construct a portfolio, and to select the best asset mix, and to select the best securities to be in your portfolio, and also to rebalance your portfolio if there is a need to do that. Okay. So with that, I'd like to thank you. We'll meet again later. Okay. Probably I'll do what we call it the video, the continuation of the video later on. Probably at night. Okay, so that I can have the ability to speak more in longer time without any constraint. So probably I do it at night after iftar, and also like to say that do we have our class next week? Hello. All right, so next week will be no class, but I will actually post you the videos pre-recorded, so you might want to I call it to you have time, and then you can actually look at the video, and I will actually we will discuss about the assignment that we need to do. Okay, basically is a simple basic I call it portfolio, as I call it asset portfolio. Alright, so if you want to have a online class, no problem, ما في مشكلة. So no problem. Okay, boleh saja. Saya pun nak bercuti juga. I would like to extend my salam to you. Okay, so that probably if you are having your last 10 Ramadan, please try to make full use of the last 10 of Ramadan, whereby you have this one night which is equivalent to 1000 months. Okay, the Surah Al-Qadr. Okay, أعوذ بالله من الشيطان الرجيم بسم الله الرحمن الرحيم إن أنزلناه في ليلة القدر وما أدراك ما ليلة القدر. Okay, ليلة القدر خير من ألف شهر تنزل الملائكة والروح فيها بإذن ربهم من كل أمر سلام هي حتى مطلع الفجر. So basically, most of you are from Al-Azhar, right, and also from Jordan and so on. So I know what you know the meaning of that verse. So basically, try to make full use of the last 10 days of Ramadan. There is one night which is the Laylatul Qadr, which is better than 1000 months. So we do whatever we can. We can actually do sadaqah, we can pray that Tarawih, okay, pray Tahajjud, and say Astaghfirullah al-Azim, and so on. So with that, I thank you. Assalamualaikum warahmatullahi wabarakatuh. Okay, we'll see you next week. Assalamualaikum warahmatullahi wabarakatuh.